Now we're going to, I guess, go into the next part of the discussion where we're talking about some of the other parts of the market that don't necessarily have their own venture capital directly to invest. But as Mark said, there's a lot of capital flowing into the market. So if you don't run your own CVC or VC, how can you leverage that capital in smart ways and help direct that? So we have a wonderful panel today. I also just say thank you so much to Danielle Griffiths, who's standing in for Katie Hulmes, who is sick today. So Danny works closely with Katie at BHP and is the principal for community in the BHP innovation team. So very, very relevant experience to add. So similar to the last panel, if I could ask each of you to do a super quick intro to yourselves and we'll get started.
Thanks, Holly. And thanks for the kind introduction as well and for welcoming me here. It's really wonderful to have this opportunity. As Holly has said, I work with the ecosystem team for BHP Innovation and with Think and Act Differently. And more specifically, I do work quite closely with our community of innovators. And we work both in open house and through an accelerator, which I'm sure I'll have more opportunity to discuss very soon.
Hello, I am Liz Dennett. I am the founder and CEO of Endolith, where we are using microbes, the world's oldest miners, to get more copper out of low-grade ores, primary sulfides, copper arsenic ores. We were actually part of one of your accelerators, so I can speak to that. And like was teed up at the last panel, we're also one of the first cohort of the Rio Tinto Founders Factory accelerators, and we are moving to the field as we speak.
Hi, everyone. It's a pleasure to be here. I work for Eramet Ideas, that is the innovation arm of the Eramet Group. It's a French mining company. We have operations in South America, Africa, in Europe as well, and the US. So very happy to be here.
Thank you so much. And you all have an amazing diversity of experience across the whole of the innovation spectrum and different forms of capital and access to different forms of capital. So this should be a very interesting conversation. I'm going to start with you, Mariel, and I guess for context, you also worked at BHP. So you've been in a company that has its own CVC and now working with Eramet, where you don't have that direct investment into startups, but obviously still a lot of interest in engaging with that sector. What's your view on how kind of people in that mid-tier market can engage with the VC and CVC market, and why should they be doing that?
I think we are in a very interesting environment right now. If we look at where money is going on in mining now, we have different speeds. For investment for new mines are growing around 6 to 12% growth per year. If you check the venture side of innovation in mining, you will see that that's growing 50, 60% per year. So it's a big difference. So we need to acknowledge we are trying to pace two different worlds. So VC and founders has a different speed than mining companies and how we grow and how we invest. So in the case of a mining company, it's a mid-sized mining company. It's a totally different environment for us. So for us, the priority is actually test and move as fast as possible to make decisions, because that's the way we also need to grow. So I see a bit of a difference when I was interacting more with the large mining companies, where you have capital. So in our case, we are a bit less able to put capital or risk capital, and we need to play in another way. So our focus is how we create frameworks on how we can demonstrate technology faster. And I found that also the planning and operational processes in mid-tier companies are a bit more agile by nature, more flexible. So I think the way we are seeing things is how we, as an ecosystem, start playing well, where the large mining companies can put some funding on things. VCs are already contributing, and we are playing, as I said, more in the agility piece of the deal flow to get to demonstration. And the previous panel said that very clearly. It is a priority for us to build innovation for implementation. So this should be the top priority for everyone working, founders, VCs, and of course, mining companies.
Thank you. Now, Liz, you have raised capital from CVCs, you've raised capital from VCs, and you also have a lot of customers that some of them have their own CVCs and some of them don't. So you kind of have had experience across this whole spectrum of people. How do you, I guess, differ your ask from your CVC investors versus your customers, and what does that, I guess, look like from your perspective?
First off, fundraising is the worst. I don't know how many in here of you have actually raising or are thinking about raising. It is the worst thing I've ever done. I've done full-length Ironman. I love Type 2 fun. I've done really hard things, and fundraising is the absolute worst. And not in that whole like growth mindset, I'll learn stuff out of it. No, it is brutal because the VC paradigm is designed for a certain growth topology and a certain curve topology. And mining is slow moving by default. It has to be safe. And even mining CVCs are typically looking for very specific paradigms that they can plug in. So in many ways, you have to figure out how you can stay true to your core technology, your core values, yet find that spark of alignment with people who all have very different stakeholder engagement models. And that is a brutal challenge. Plus, I have a PhD in astrobiology. I am not a 23-year-old fresh out of Y Combinator that is delusional with the fact I'm going to change the world. I have made so many original mistakes that if anything, we've been far too cautious, being like, oh, you want 60 ways our technology is not going to work? We can give you 73. But to answer your question more directly, a lot of it is staying true and aligned to if there's a mutual fit. All investors typically have a different flavor, a different persona. They want different things. And if you can make it a win-win, regardless if it's a financial VC or CVC that was spoken about earlier, there can be a really good win-win there. But sometimes you go in there, and if it's a more generalist climate tech VC that just doesn't see eye to eye with mining, or they're like, hey, mining customers move slow, you should fix that by going above the heads of the people you're working with and fundamentally like that's not going to work. That is not how you earn trust and build lasting relationships. And if your VCs don't get that, they're not the right team members.
And to build on Mariel's comment, Liz, on the mid-tiers can move a bit faster, and you have a range of different customers across the tier ones and mid-tiers. Have you noticed and experienced that difference personally as well?
1,000%. We have worked with BHP, we're working with Rio Tinto, we've worked with a number of customers. I can candidly say this because I don't see any cameras recording me aside from those big bright cameras. Our first field deployment trials are going to be in the US, and they are not with either of those customers right there. They're places where we can take our biohatcheries, and we've been building those relationships for years and years. Part of it is understanding the risk. Most startups make a lot of mistakes. They can fail the first time. And very candidly, I don't want to fail with either of you guys. I don't want to fail in general, but if things go sideways, there are places where we can have stakeholder engagement, where the mid-tiers tend to be much more open to embracing technology at a TRL 5 or 6, whereas you typically have one shot with a tier 1, and you want to make sure that you are putting your best foot forward. That's a very controversial answer, sorry.
No, I think it's great, and I think it's worth pointing out as well. I think we're not trying to say here that you should only innovate with the mid-tiers and forget the tier ones. It's not at all. It's just like, who do you work with at different stages in that life cycle? And often we're finding, the tier ones are great at helping early stage experimentation, but then maybe work with the mid-tier to do the demonstration and then come back to the tier one when you're ready to sell and scale. Because often the tier ones have much bigger operations than the mid-tiers, and actually to sell into that, it does take time to get to that point.
And we have a multi-pronged commercial strategy. Andrew, our CFO and Chief Commercial Officer, is around here somewhere. But our team comes from Freeport. It comes from Rio Tinto. It comes from end users that have spent the past 20, 30 years of their life on mine sites. And customer feedback is always great. The more customers you can talk to, the more feedback you can get, the better off you are.
Awesome. And so, Danny, obviously BHP does have its own CVC, but working in your team, BHP's known for its open innovation and has a very expansive ecosystem with lots of different funding ranges. So you are actually looking a lot broader in terms of how you interact. How have you, looked at engaging some of those external funding sources? And I guess what do you see as working and not working so well?
Yeah, thanks, Holly. And I take some of the points that you've just made around some of the challenges in engaging in a tier 1 mining company in that developmental stage. Absolutely, as Melissa mentioned before, we're a fairly large beast and there's a lot to connect. But generally speaking, we do have the two main ways that we operate are with our open house, where we invite scale-ups and startups to interact with us and to engage with our problem statements. And also we have our accelerator, where we do sometimes bring through a cohort that is in a particular theme that we're trying to work towards. And through both of those mechanisms, we're really looking to connect those innovators through with the opportunities that exist in the company. And when I talk about opportunities, I'm talking about our actual problem statements and really getting them that experience and understanding, but also connecting them to our SMEs, making sure that they're getting the right kind of feedback on what it is that they're offering and being able to pivot that if necessary. Those sorts of things are what we're hearing from our innovators are the most valuable, and that's, I guess, what you're talking about as well. Yep, in sort of getting, especially through the earlier stages, so connecting those things through. And when we do speak to our innovators after they've engaged with us in that way, typically the things that they cite as the most useful are that credibility and association, the visibility and being able to demonstrate their technology with a tier one, and typically that catalyses the kind of investment that you're talking about. That's really what's required to give that confidence in the investment.
Yeah, did you hear me go into autopilot being like, and we're publicly working with BHP, we have a press release if you Google it. That is so paradigm shifting for an early stage startup. We're 15 people in Denver, and for us to be able to not just do the work, but we were able to put a press release out there. We all collaborated. Holly was a key part of that. That is incredible for an early stage startup. That is just completely unprecedented. And even if we could have gotten that with any of the mid-tiers, it just doesn't have the same kick. And it's so, so cool. And it's such an honor to be like, yes, we were working with BHP, we're working with Rio Tinto, we are working with Founders Factory. Like that is incredible.
And just to add that, there is also another good contribution that large companies are making is you do a scouting process that is super good. Many of the deal flows CVCs has are very, very instrumental for smaller companies to really learn from. So it is an ecosystem thing here. We're not talking about, at this level, competition is just out of the table. It's just knowing and learning more the technology development. Everything contains risk and is high risk. So managing that will be different temperature depending on the company. But as much as you learn and you have that information available in the ecosystem, it's very, very valuable.
Thank you.
Yeah, that's quite right, and something that I left out of what I mentioned before, but really that ecosystem piece is super important. So that's something that BHP really focus on as well, beyond obviously developing things towards our own solutions. We do recognise that we operate in an ecosystem and that organisations like both of yours play a part in that, and it's really important that we can support each other.
And I think what we've seen through the BHP programs as well is just connecting people at the right time who might be working on different elements of the problem, whether that's the startup or OEM, and I think the BHP team does a really good job of actually catalysing that and thinking quite carefully about how you curate the groups that are working together to kind of create those opportunities so that ecosystem can then naturally kind of grow itself, which is a great thing to see. I think, in the last panel we talked a lot about this problem with the Series A to Series B gap, or that kind of, sorry Liz, I feel like I'm just stabbing at all these pain points, sorry. And there is that, especially from the startup side, we talked about, when you raise capital, you often have these milestones. Your pressure is speed, like everything for you is speed and deploying that capital to get to where you need to go. And the mining side is more about risk. So I think we've all kind of talked about this problem in a range of different ways. So I'm keen to get from each of your perspective on how do we tackle that problem given the situation that we're in. Who wants to go first?
I will. Openly and transparently is what we're doing. I mean, it seems like it's very common sense, but we are very upfront. When we look for investors, mostly I want someone that just at a gut level I can call with bad news. I always say that our culture is based on 3 principles. We love safety. Safety is a non-negotiable. We love critical feedback, and we love snacks because we're an early stage startup. But with that critical feedback part, that means investors, I don't want assholes who are going to be just really mean and not see the potential of the company. But at the same time, we need to have a lot of tough critical conversations around how we scale and how we move forward. And that comes with a lot of transparency and realizing that the biggest questions we get when fundraising are, what are the exit pathways? Why are there not more unicorns? Why is your TAM only $4 billion? What are you thinking about in terms of making it a platform, et cetera? How do you deal with mining customers that move so slowly? And just tackling those with a lot of genuine heart. We haven't closed our Series A yet, though, so stay tuned.
Imminent.
Maybe to add to that, so it's a reality. You have, it's calling, some VCs call it the missing middle, right? Between the transition between Series A to B. So capital is a bit harder to find in that sequence. And we identify that as an opportunity because, again, I think there is much we can do that is beyond capital. And the experience, you talk a lot in BHP and in Rio Tinto about the experience of going through interacting with a mining company. So I'm not pitching here that we are the solution and we have everything solved. You are far away from that. We are working hardly on collaborating among the industry to get there. But I think a very good important thing for us is create, as I mentioned, the framework. So one practice we have now is clear asking for a startup that is looking to demo what they actually need and what metrics we will consider to make that decision. Because if you are not upfront clear, they won't be able to pitch you anything or present a proposal that is suitable for our company. And I need to say, innovations teams, I feel we are translators. We are experienced drivers on that, but we are not the decision makers within the company. The reality is that we have operational teams, planning and technical teams, and those requires other metrics that maybe we didn't know. So I feel my team is very focused on identifying these factors, requirements, putting together a business case together with a founder, and then creating the option. And sometimes it takes, we're now targeting 12 months process to get a yes, and the idea is to have this slowly diminish into 6 months. At one point, it's like a very, very good deal flow of demonstration projects coming for a small company that we don't have more than 4 assets. So imagine what the big ones can do with this model.
So in terms of where we go with development broadly and how we progress beyond those initial stages, we do, as to your point earlier, we do really look to facilitate that connection that's required with the rest of the ecosystem to develop. So we do have examples of partnerships with OEMs or engineering companies that we've organised. And we do that in consultation with our business and the SMEs, and also with a view to business adoption eventually. So everything we engage in is with a view to eventually bring that through. And we do work with the companies that we engage with to really refine their process and the pathway that they see forward, and to help support them in that journey in terms of visibility, connecting them where we can. We do work with our venture capital arm as well, and we do introduce some of the innovators where we think that there's a good link there into those opportunities also. So it's really, for us, it's about catalysing that investment and making sure that we're sort of sending the signals that they need to attract it.
Yeah, awesome. And I think that the data actually shows in itself that startups that go through these early programs, do secure more funding and development partners and things afterwards. So, even if that's not directly with the people that are doing that early stage demonstration, that shows that ecosystem effect then happens afterwards as well. Liz, sorry if this is a hard question as well, but I'm interested, we talked a lot about the difference in timeline, and VC, even though venture is kind of traditionally supposed to be there for patient capital, at the moment, a lot of funds are kind of looking at 5 to 10 year returns, and probably like 3x at a fund level, which doesn't always
10x at a fund level.
Or 10, 10x at a fund level. But we know that doesn't always align with mining. Are you seeing, as the kind of investor ecosystem matures, that those timelines from an investor perspective are shifting? I mean, we often hear that call for a need for even more patient capital.
Yeah. So we launched our Series A beginning of June. Hopefully it'll all be wrapping up in the next week or so, and the money will be wired. It might not be. I'll never know until the money's wired. But I talked to 120 VCs. So I have a fairly large sample size. And most of the big generalist climate tech VCs are like, we've been wanting to make an investment in critical minerals. We want to make an investment in critical minerals. You're doing $2 million in revenue. You're working with 6 of the biggest customers. You're going to the field. Your TRL is good. Your customer interviews are really solid. But ... We have a $300 million fund. Every investment we make has to be a fund returner. So even though your TAM is massive, it won't fit to be a fund returner. Or even though the timeline could pay out in 5 years, could pay out in 3 years, we don't have documented evidence of other exits we can put into our spreadsheet and copy paste that over. Or we really want to make a play in critical minerals, but everyone on our team has just been doing B2B SaaS. So what is, when you say mining, you're going underground with hard hats and pickaxes. And so the technical sophistication of where we needed to get people, you cannot overcome that in a few months. And then there's so many other competing parameters. So it was a really interesting seed to kind of put your fundraising boat out, because what you hear from primary and secondary sources is very different from what you actually see when it comes time for the rubber to meet the road. We have been very fortunate to be working very closely with the CVC team at Rio Tinto. I wish Pekka or Arten were here. They've been great for a lot of these coaching conversations. And all of our seed investors have come in for their pro rata plus, and they've been very committed. I think Grok might be here somewhere, which is great. We have an Australian investor. But weighing those optics, plus the fact that every time you wake up and check the news, there is a new headline about critical minerals. We've gone through copper tariffs being announced, copper tariffs being realized, different trade agreements, the US government taking a stake in MP Materials. There have been so many other geopolitical pieces that even though it might seem like a tailwind or a slipstream you can slip in, that creates uncertainty, which feeds into risk models, much like the previous panel called out.
Yep. Okay, so there be more funds that are actually a bit more patient? Do we need that?
I think there should be more funds that specialize in understanding what this needs, what this broadly as critical minerals is. You get it. You get it. I can talk to someone from insert any big name generalist climate tech fund, and they just don't grok it at a very intuitive level when it comes time for customers. The point about the customer, I always think of mining customers as like this very complex network of piping and who you talk to. You can't cut rank and just like LinkedIn message the C-suite officer and be like, you need to be doing this. And that's the feedback you get from some VCs is like, just do it this way because it works in SaaS, it works in other models. And if you don't see alignment, not just in the timelines, but in the ways of working and the cultural innovation needed, it's not going to work.
I think there is a learning curve in the VC sector right now. It's good. Again, we are very lucky that we have CVCs, corporate VCs that really know, understand better BHP, Rio Tinto. There are some others in Europe that we have a bunch of them. I think it's easier to work with them. It's difficult with a traditional VC, has been in other industries. They think and expect differently. But I think there is a space for more dedication in critical mineral investment. And it's coming. I'm very optimistic that it will come, that they will learn faster, and they will come with different models for founders and more friendly ways to also communicate the expectations. Because they can be hard. You have a point, Liz. I interact a lot with VCs and especially with builders right now, because another point I want to make, some founder things, I don't know why we create that image that you need to come very advanced in the technology to pitch when you are ready to demonstrate. I do prefer to founders to come very early. And the sharing and feedback of desktop level concepts help me to understand, because again, as a mine operator, I care about timelines, cost, so CapEx, so it's a different language. So I do want to know where you're heading. And I have a roadmap, an innovation roadmap not for now, for 35 years. So Horizon 3 portfolios are very long term. So I think it's very important that we have that connection very early on. And I guess VCs are also going to do the same. No? Maybe you're not ready for a Series A now, but I want to learn what you are doing. I can give you feedback because you will be my deal flow later. So I think this level of interaction and collaboration will happen. Again, maybe I'm too optimistic, but I do prefer that.
If you can solve it before our Series B, that would be incredible.
We will. What's the time gap there? Like 1 year, 2 years? Who knows?
Which of our investors you talk to. It depends when the money expires.
I might just, Mariel, I'll pick up a little bit, I'll continue what you were saying, because I know you've spent time working. Oh, sorry, Danny, did you want to jump in? No. You are working or talking to some of these venture studios in Europe and kind of going in right at the start to help them understand some of the problems that you're facing. Can you share a little bit about that experience, like what they're kind of bringing to the table, what you've learned through doing that?
I will be very honest. Pure VCs at the beginning, they were like, sort of, I don't need you, right? So I made my own research. I have my thesis. So yeah, you're a small company in Europe. You don't have your operations here. So they were willing to open. They are very friendly, but they were not seeing necessarily the connection I was seeing. But once we start talking, and I just iterate one model with one French VC, indeed, a ventures builder, and they were like, okay, this is very insightful. So you put your technical teams on here. I don't care. Again, right now I don't need the solution. I need you to know and search for that, because I think constraint of time and money is very powerful. I don't have the budget of BHP and Rio Tinto for the scouting. I don't. So I need to pitch my problem and get someone that reached to me and prefer not to work with the big ones and come to me, and I'm fighting for that deal, right? So that entrepreneurial journey in a mid-tier company is pretty powerful. And I found now the reaction is totally different, and we are scaling up, this Unearthed has been instrumental in that process. So really scaling up this and start doing more proactive engagement with VCs and venture builders in Europe and hopefully beyond that. And I just want to add one thing, because we were talking about ecosystems and engagement. We are in Australia, I live here, so I'm coming back home. I love this. It's a very, very strong and powerful ecosystem, but it's not the only one. And one thing that we need to keep doing is connecting with other ecosystems that has very good capabilities that can potentially be complementary. Because maybe here are very good high capabilities, but more structured mining companies. You have more family-owned mining companies in other hubs. Chile, Peru is a great example in South America, that they also have the expertise. And I'm talking also to the mining companies. Us, as miners, we need to partner more. Because if you are not ready to test something, but you know you need biotech working, so you can maybe make those alliances with other mining companies in other parts of the world.
That's a really important point, I think, about connecting into the business, but also into those opportunities. And one of the really key things, and I think Melissa touched on this earlier too, is that opportunity to demonstrate and to really connect into the experiences that are what really is going to prove out and get that investment happening. So, and you're quite right, yes, BHP is a little bit risk averse when it comes to some of that, but we have found some really great opportunities in partnering with other mining companies, with OEMs, and the like, to really find those opportunities and get the innovators out there and demonstrating in the actual mining environment. And the other thing I would say is that something we're seeing a lot of lately is cross-sector innovation. So we're finding that we're working with a lot of companies who are already fairly mature in their technology but have come across to mining. And in particular, we've had some feedback that the proactive approach of things like open house and so on really tend to accelerate that kind of work. And so they're finding that opportunity to come across, prove out their technology in the mining environment is really helping to push innovation in the mining space and the investment into it as well.
Awesome, thank you. Okay, we're nearly at the end, so just a quick fire last, any call to action, any visions of the future for this kind of how the, operators directly engage with the VC market?
Maybe just two messages. Maybe I'll repeat myself, just summarize. Early engagement for us is very important. And the second message, I would say, innovation made for implementation. That obsession we need to have for going on site as early as possible. I don't think founder needs to wait that much to get engaged. And if mining companies are not open, we need to change that.
Yeah, I think ours would be, and I tell this to other startups all the time, is if you don't have mining expertise on board, get that mining expertise on board. It is an industry that is so built on trust and safety, and companies like BHP have a social obligation to move slowly and safely. This is all part of the cultural fabric. So if you are at the outside looking in, being like, I don't understand why they move that way, they should just do it this way, then you don't understand your customers enough. So get that customer feedback and hire a team that can help educate you.
There's a theme here, and I agree entirely, that connection with making sure that we're getting innovators through to see what really matters and talking to the problem statements, talking to the people on site, and really understanding how their technology works in that space and being able to demonstrate that out. And I think the tier one mining companies play a role really in lifting the visibility and that experience piece for the innovators in the ecosystem.
Awesome. Well, thank you, and a special thanks to Liz, because I actually don't know why you're here while you're just closing out your Series A, but thank you.
I'll go anywhere you tell me to go. I love everything, and I'm so grateful for all the opportunities we've had. And also, my other shout out should be, if you have not met the other startups that have their booths in innovation alleys, can you guys raise your hand real quick if you're one of my startup peers? All right, there's two of them. Go find them and go talk to them and give them money, please. Thank you.
Thank you so much.